What is going on, guys? Welcome to another episode of the Dividend Investment Guide. We are currently looking at doing a stock analysis on Taylor Wimpey. As you know, it's probably one of my leading positions in my current portfolio. Sitting at about current value about £200, buying value at £270. So over this, we're just going to be going over a couple of things and why I'm buying into it and why I believe it's a good stock to look at and to boost my portfolio substantially, really. Um, so first of all, just wanted to start with a bit of good news, I believe. So as you can read here, Australia's scientists claim they've successfully tested an anti-parasitic drug which kills coronavirus within 48 hours. Now, if you scroll down a little bit, you can see good news here. In lab conditions, it's managed to kill the virus within 48 hours. Now, this drug has already been FDA approved, so hopefully they should be able to push this through quite quickly as soon as it goes to human trials. Obviously, we can see where it goes from there, but fingers crossed with it being one that's already being FDA approved, should be able to push this drug through quite quickly and hopefully see some results. So hopefully we're on the verge of defeating this virus that's going about, and we can look to the future and look to make a return on our investment rather than seeing them go down all the time, really. Um, so next, I want to go into our stock. So we're looking at Taylor Wimpey today. Now these have a trailing PE of 4.93, quite a low PE. I believe the industry average is quite a bit higher. I'll just see. Right, so Taylor Wimpey, it's up there with the big players. It's got a high market cap. Their PE ratio in comparison to others is down there on a lower scale. It's 4.82. Looking at Persimmon with a 6.1. Berkeley Holding, these are also big players in the industry. Barrett Development. So, I mean, looking at that, it's a really, really low PE ratio. Galliford Try, I'm not going to bring into the equation just because they're so risky at the moment. If you look at Galliford Try here, um, I can't look at Galliford Try when I looked at it, but they actually dropped drastically. They were trading at about £8 a share. They dropped out at £1.50 a share not too long ago. I'm not sure the reasoning behind it, but obviously it's going to be a risky business going into something that dropped drastically. Don't get me wrong, I do believe we'll be able to get back on there and boost them holdings again, bring the share price back up. But for me at the moment, that it's just too low. It's too low, way too low. And so I'm going to be ignoring Galliford Try, but everywhere else, Taylor Wimpey seems to be within the range that I'd be looking for a company of this market cap. So as for the market cap, we're looking at 3.33 billion. Now, in terms of news, I did mention in my previous video they have recently got rid of their directors' bonuses, the senior management bonuses. They've also cut their dividend. So I'm going to go on to that a little bit more in detail a little bit further down the line on the next tab I've got open here. But they did cut their dividend. They had a final dividend of about 8p, and then Taylor Wimpey tends to do a special dividend. Their special dividend comes to, I think this year was 11p. Somewhere around there. I think it might have been 5p a share and 11p a share for the special. It's 5p for the final, 11p for the special. But I'll bring that up in a bit more detail shortly anyway. But they've cancelled that, and obviously they cancelled them bonuses for the directors, which shows that they are involved in staying active in the market. They're not willing to risk money that they don't know if they'll have. So they're doing everything in their power to stay in business, basically. And I don't know where you're watching, but hello from the UK anyway. And we're getting towards the back end of the quarantine now, so I think by the end of this month we're going to be coming out of it. Fingers crossed, anyway. But here in the UK, we're only for every person that gets infected, they're only infecting 0.54%, 0.54 people So that just means it's deteriorating. If you're less than 1 for 1, then obviously it's slowly fading out, and hopefully by the end of the month, then we can see some positive signs from the lockdown we've been going through for the past. Personally, I think it's been 2 weeks. Hopefully another 2 to 4 weeks, hopefully, and then we can get back on with our lives. Because yeah, it is driving me a little bit insane now. So yeah, their price to book value is 100.4. Fiscal year's just ended. I believe they had their Q4 report recently. I know they've got their annual meeting coming up, the annual general meeting AGM coming up at the end of this month. So it'll be interesting to see what comes out there. I'm quite excited to find out, with it being one of my biggest holdings. I've currently got an average price of about £1.20, £1.30 on them. So I'm down about £70 on my total investment. But I mean, they were trading quite recently. Go back to a month. They were trading about the £2 per share mark. So yeah, hopefully we're going to get back up there. For some reason, it's not working when I do that. It's giving me that and that. Yeah, if we're going to max, I mean, at one point they were nearly £5 a share. I do believe that we're going to be seeing some good returns from this investment. It says here the next ex-dividend day is the 4th of June, so I'm not sure if there's been something they've declared that I've missed, but they said they were gonna review the final payment and the special payment. So I'm not sure if they got delayed or whether they're not going forward with it anymore. Either way, I just want to see a return on my investment. It is a dividend portfolio at the end of the day, but I'm not gonna be that bothered if they do cut the dividend just to focus on growth, because at the end of the day, it's all money in my pocket, and I believe in the company. So yeah, a couple of the highlights here on the list. I mean, 2 FTSE 100 stocks I'd buy during the market crash. Oh no, avoid. Stay away from. Are these listed here? Right move, Taylor Wimpey. Okay, so let's have a quick read of this. Bad news for the UK house builders, especially Taylor Wimpey. One sales started to fall through, hasn't much sharp slowdown. Dividends has been scrapped, earnings are forecast to drop substantially. I mean, this is all stuff that I already know anyway. For this reason, stay away from Taylor for the time being. Same goes for other UK house builders listed. I mean, I don't agree with that at all. I believe they've fell to the point now where they can't go much lower. They're trading at nearly just over £1 a share, so I definitely don't agree with that. If we do come out of lockdown by the back end of this month, then I mean, when was this article posted? 30th of March, and it's now what, 6th of April, 5th of April. Yeah, I don't even know what day it is, like being on lockdown. But yeah, I mean, it has been announced that they're going to be potentially letting us go back out and back to work and everything by the back end of this month. So I wouldn't take this wholeheartedly. I mean, there's another one here on Fool saying the same thing. Cancels dividend. I'd buy and hold these two crashing dividend stocks in nice a day, and that's before they obviously dividend crashed. The Wimpey ads management, board pay cuts to coronavirus, defensive moves. I think look cheap for stocks and shares ISA right now. So I mean, it's a mixture of good and bad news, the same as always. Yeah, let's get into our little video anyway. So it's just going to be Pete Redfern here, who is the CEO of the company, CEO, Vice President, one or the other, something like that.
Shareholders, when you cancel the dividend?
I think complete understanding, to be honest. You know, it was the beginning of last week, which feels like a long time ago now. But I think all shareholders understood very quickly, you know, the sort of nature of the circumstances, and that, you know, sort of if you look at different scenarios, sort of that we could resume paying dividends quite quickly. But actually, people wanted us to take the right decision now to look at, sort of the security of the business, at protecting all of our stakeholders. So, actually a very supportive reaction from our investors.
You were one of the first house builders to close your construction sites. Are you worried about the impact that's going to have on your supply chain?
Of course we are, and even before that decision, we'd written to all of our suppliers and all of our subcontractors, telling them that we were going to be in it together, that we will continue to pay them sort of through this crisis, and actually we're looking at the moment and in kind of quite close dialogue with both suppliers and particularly the smaller subcontractors, working out how we can help them through this.
So I mean that to me it just shows a solid company. The fact that they are willing to pay their subcontractors. I've done quite a lot of recruitment. I mainly work in recruitment, and I recruit a lot for the construction industry now. A lot of these big players, the main contractors, your Taylor Wimpeys, your Balfour Beatties, all of the likes, Persimmon, they all tend to take the mick when it comes to subcontractors, because obviously they think they're the big fish, they can just do what they want. But I mean, the fact that they're paying their subcontractors, keeping that supply chain fed, keeping food on the table for them, it just shows a solid company that is looking to help everybody through the crisis, basically. So the fact they've cut directors' pay, they've cut their dividend, I mean, that's all fine with me. The keeping their supply chain there, ready to pounce as soon as the moment this is over, which, I mean, for me, it shows a lot about the credibility of the company, the way that they're handling things, and how they just run as a whole. It's a good business, in my opinion, to look at, and obviously they're doing the best by everybody that they possibly can, which is the main reason I'm sticking with them. I'm not going to be pulling them out of my dividend portfolio, despite the fact that they have cut their dividend. Besides that, I don't really know what else I can say about them. If we go back onto here a little bit, so if we look at, it doesn't show you the forward PE, because obviously we don't know when this is going to be over, when it's going to end. But if I did want to bring up their year-on-year growth. Total cash. So I know that they took out a £550 million loan. I believe it's going to be a short-term loan. So I do believe that is going to hopefully get them through this, keep the subcontractors happy with them, and obviously we can just move forward with the contracts as soon as they do go back on market, and as soon as we're able to get working back on sites and so on. So I mean, their total debt 1.12 million. That's not bad, really, considering how much cash they've got. They can easily pay that 5 times over, and and then they'd have no money. But I mean, their operating level alone is 550 million, 510 million. So that's that minus that, I believe. So yeah, levered free cash flow 422. So I mean, they're not in a bad position, really. They can operate on that. They shouldn't have any issues moving forward. So it's just going to be a matter of as and when they bounce back, I believe. We've put someone else's here. We have not got anything in there, unfortunately. Next 5 years return, current quarter. Okay, so they're expected to grow about 4.51% each year. So for me, that's a solid return. That. So yeah, just before we end the video, I just want to go over my current portfolio, what I've been buying. So AGNC, we have purchased another 13 shares of these. Oops. So we are currently at 35 shares with a buy price of £9 and 5 pence per share now, bringing that cost basis down. Yeah, so that's actually my number one position at the moment. I am down on it, £44, but it did start climbing. it basically is $9.63 right now. My buy-in price was $11.20. So hopefully that's going to keep climbing. I did manage to get another, I think it was about 10 shares just below the $9 mark. So that is going to be, for me, that was a buy. As soon as I saw that, it was a buy. I had to go back in on it. Like, it was impossible not to, really. I had a bit of change, so I rounded this up from 18.5 up to 20, so that brings that up. BP is exactly the same. I rounded this up as well, although I am really nervous about Carnival Cruise Line. I think Jeremy might have screwed me there on financial education, but we don't really know. We don't know. I mean, it could grow exponentially over the next few years. It could go bankrupt, but I mean, for the cost, £189, I'm not gonna be too bothered. In fact, I think it was less than £189, because our cost basis now is at 15.36. Yep, so that saved us a fiver there. And this one was 2.27. Okay, so energy transfers exactly the same. ExxonMobil, we rounded that up to 5, bringing our cost basis to a penny cheaper. Yay! Obviously, it wasn't much shares, but I had a little bit of change from my AG&C ones. GlaxoSmithKline, we sold these to get some more AG&C. I just want to sort of fortify and dollar cost average on these positions. If you don't know what dollar cost averaging is, then it's basically where you see the price go down, you buy in again, and it brings your average cost of that share down to the point where it's lower than when you originally bought it at. So that's basically what that means. Legal in general, I bought quite a few more of these, so I've went from 37.8 and I managed to round that up to 50 now. 50, and that was a cost basis of 1.69. Okay, and Taylor Wimpey, we're still at 200. So I've got 8p dividend in there. That's their annual, but if I included their special in there, which was 11p, as you can see here, it goes from 140 to 162, so £38 on that. Obviously they have cut it this year, so I'm not taking it into consideration. I'm just keeping it there, so obviously I've got an idea of what I will do after this coronavirus ends, and obviously the current position might just be postponed anyway. It might still get paid their current dividend anyway, so I mean that's fine by me. So thank you guys for watching. Hope you enjoyed the video. I know it's been a bit staggered, but I really do hope you enjoyed it. If you've got any suggestions for me, anything you want me to go over, please feel free to let me know in the comments. Do feel free to hit that thumbs up key, help us out with the YouTube algorithm. If you haven't already, then please hit the subscribe key. It'll help us out a great deal in terms of growing the channel and moving forward to hopefully get my viewer count up, and obviously more people can see it from there. So thanks for watching, guys, and I will see you in the next one.